25th of June. Hello, everyone, and welcome to the show. We're live to you from our global headquarters in Lagos. I am Bosin Omofaye. Let's get the one-hour show started with this big news from around the world. The World Bank has revealed emerging and developing economies' growth forecast for 2019 and 2020. According to the Bretton Woods institution, the forecast has been raised to 4.6% GDP growth in 2020 from 4% in 2019. But the World Bank says risks of trade fight, financial disruptions exist, and emerging and developing economies will stabilize in 2020 as some of these economies move past periods of financial strain, but economic momentum within emerging and developing countries remain very weak. So what are the risk lists that was published yesterday by the World Bank? Rising trade barriers, of course, between Washington and Beijing, Mexico and the EU. Also, we have the other risk list, renewed financial stress, according to the World Bank, and sharper than expected slowdowns in several major economies. That's according to the World Bank. Have you looked at the current manufacturing data from major economies this morning? India reporting manufacturing PMI down from 51.2 reading to 50.1. That's part of the story. We're seeing this slowdown in economic numbers across the Eurozone, China, including the US. Globally, according to the World Bank, economic growth will ease to weaker than expected 2.6% this year before inching up sluggishly to 2.7% next year. You need to keep that in mind. So let's talk about sharing the latest Abacha's loot. Nigeria's former head of state, late of course. Nigeria, US, and the island of Jersey will distribute the latest 267 million US dollars of Nigeria's stolen funds that was discovered in offshore secret account in British Virgin Islands. According to news reports, the loot was laundered from Nigeria through the United States and deposited into accounts on the island of Jersey. No details has been provided on how the money will be shared between Nigeria, where the money originated, and United States, where the money was laundered through, and finally the British Virgin Islands, of course, but the money will be shared. So let's give you a bit of a reminder of how much of the Abacha's loot that's been discovered and returned to Nigeria. So follow the loot. Switzerland, which seems, at least by current accounts, seems to have been the destination for most of Abacha's loot, had returned estimated 1.04 billion US dollars. If you do that, on the street translation, about 360 naira to a dollar, that will give you about 318.728 billion naira. The 1.04 billion dollars have been returned to Nigeria in about three installments since 1999. And the current discovery is 267 million US dollars. That gives you roughly 82 billion naira. So if you put it in total, about $1.270 billion of Abacha's looted Nigeria money has been discovered, and that's following the money. Now, you need to follow what is called digital mobile money. For those who are on Market Street and in the fintech space, everyone is gearing up for the new landscape on Broad Street that will change the future of banking and financial inclusion, as well as financial services in the country. And that's getting the big boys in the telco business into the business. MTN, as you may have heard, has set up a new company, a subsidiary, that will enable the telco giant obtain a central bank license to perform digital financial services, what you call mobile money. Glo, Airtel, and others are also lined up for this very juicy new line of business. So let's get a bit of a sense of how the new landscape will be shaped up and who will draw it, who will be the big boys in the new financial power play. Kolaye is a market operator, a chief executive officer at GDL Asset Management, and is live to us here in our headquarters studio. Good morning. Thank you very much, sir.
Thanks for having me.
We appreciate your coming despite the public holiday. This is big business coming up. Everyone looks like they're gearing up for this. What are you learning at the moment, and what's your insight into this new line of financial frontiers and what it will mean for every one of us?
Thank you very much, Bosin. I hope that optimism will not be disappointed. I think that generally banks are seen to be very profitable. They're making a lot of money. And it's thought that the introduction of payment service banks will introduce an element of competition for the banks, and that more importantly, the payment service banks will be able to render services where banks have failed. I think we need to back up and say, what are the objectives? It will appear that from the guidelines, the objectives of CBN, the objectives of the regulator, is to encourage financial inclusion, bring the unbanked and the underbanked into the net of financial services, and perhaps stimulate economic activity in the rural areas. That's the major objective of the regulators
banking.
For digital banking.
Yes.
Now, you now have to ask yourself whether there's going to be strong alignment with what the telcos or whichever big operators come into that space will seek to achieve. I think that these organizations are primarily, they have a strong profit incentive, and they're going to go into this for profit, and the developmental objectives will be secondary. It will only be achieved to the extent to which it coincides with the profit objective. I am not sure that in the rural areas that the opportunities are as significant as we might think. That's my first reaction.
That's the first word.
Yes.
But if we look at Safaricom in Kenya and what's been done with M-Pesa and the rest, do you think we have a model here?
The issues with Kenya has achieved a significant amount of financial inclusion and financial penetration and a lot of exclusion. The issue you want to ask yourself is that to what extent has that substantially lifted the Kenyan economy? I mean, let's look at some statistics. The biggest problem in the rural areas is not financial inclusion, it's finance and income. You can only include what you have. Take some data. Money supply, even wide money supply, is 27 trillion. The currency outside banks is only 2 trillion. So if you created a system that was going to bring all the money that was outside the banks into the financial system, all you have is 2, which is less than 7.5% of it. Now, out of that 2 trillion, my own guess is that the bulk of the 2 trillion is made up of money in the urban centers, that is outside the banks, and money that for whatever reasons has been stashed in wardrobes and have not been found. I'll be surprised if you're looking at more than 500, 600 billion of money compared to the deposits of the existing banking system. I don't think that is a lot. The other thing I'll ask you to wind your mind back and take a look at that. There was a time when, although we are not in the digital age, the government and the monetary authorities tried to encourage banks to go into the rural areas in what we call the rural banking. It didn't quite
of the 80s and early 90s.
Quite work. Now, the digital model will make the cost much lower. But in my view, the biggest problem in those places is income. It is not inclusion. A very great NGO here called EFINA has done a financial survey. And for financially excluded people, they say there are about 37 or 38 million of them. Their median income is 15,000 naira. So if you are earning 15,000, and I guess that's per month, if you are earning 15,000, what incentive is there to bank it, whether it is digital or whether it is with a normal bank account?
Technically, from hand to mouth.
The issue is poverty. I think that if the big players start off looking at the rural areas, they may be disappointed fairly quickly. This is my guess. I mean, the jury is out. And I think that what will then happen is that they may make an attempt to fight in the urban centers
with the big banks, with the big deposits,
yes,
and what have you.
Yeah.
So you in your thoughts, you think there's no major cause for concern for the banks for now, looking at MTN, Glo, Airtel coming in onto Broad Street and perhaps sharing their lunch?
Ask yourself this question. You know, the big boys, because they have such a large penetration with mobile phones, are looking at the rural areas. That's not a major source of business for the banks. So the banks wouldn't have cause to worry in that regard. However, if competition now pushes them to want to enter the urban payment space, I'm going to ask myself, to what extent will they be able to unseat the banks? In the urban space, the banks are pretty much entrenched. Different kinds of payment channels that the banks have pushed aggressively has achieved a significant amount of penetration in the urban space. I will be surprised if they would. I don't think the banks should cross their hands and go to bed and say nothing can happen. But I think they are very entrenched in the urban areas, and I think it's just going. I don't think it will be easy to get them to shift.
The banks won't be an easy pushover.
They won't.
For the telcos.
They won't. They will not.
So the telcos will want profit, and they will want to ramp up subscription numbers. And you think that with the rural hinterland part of Nigeria, the numbers are not that significant?
I mean, let's face it. Even in advanced countries, there are rural areas. There are agricultural communities. Why isn't there a financial inclusion problem? Because there isn't an income problem. I love the financial inclusion model. I think it's a good to have. I think it's good for the system. But is it a must-have? You know, is financial inclusion the cause of a problem or the symptom of a problem? In my view, financial inclusion is a symptom of a problem. It's a symptom of a problem that there is no income. When you deal with the income
levels,
when you deal with the income levels, then financial exclusion will substantially
take
diminish.
Care of itself.
You see, we will have had a major problem if people are having income.
So income and national productivity.
Precisely. If you drive income up and people, for whatever odd reason, decide to be keeping their monies under their bags, then you say, okay, we have a financial policy problem. We want to bring people into the formal financial system. It's not a problem of attitude. Somebody who earns 20,000 naira per month says, I live on 1,000 naira per day, and maybe I earn the 1,000 naira on a daily basis. Or I earn 2,000 in one day, I don't earn another day. So what point is it?
How much of that goes to savings?
Very little. For these people, the first important thing is survival. It is survival. Now, I mean, the jury is out, but this is my hunch. I keep asking, in other agricultural communities, which are medium income by world standards, why isn't there a financial inclusion problem? It is because there isn't an income problem. And mind you, I do not say that financial inclusion is not a good thing. But I think financial exclusion is not the root, is not the cause of the problem. It's a symptom of a problem. And you must deal with the problem and before you face the symptom. But should we go ahead with it? It's good. We don't lose anything.
So if we say this is just going to go beyond banking services, perhaps it will include micro-pension, which PENCOM and the government is pushing, maybe to include insurance and a few other things. Do you think we should look at this beyond just banking and payment services, but to include the entire basket of financial services? Perhaps we could provide pensions at that local level or at the very rural level. We can bring everybody on board to the entire, maybe they could engage in stock market investing, mutual funds, using this new digital financial services window.
I'm sorry, boss, I don't see it.
You don't share my optimism.
Things like insurance and pensions are things that people do after they've reached a certain level of comfort. You know, you're asking somebody to save for his future. He says, I'm about to die. What future are you asking me to save for? That I need to survive today. You are asking somebody to insure against death. He says, I'm almost dead. Let me stay alive first of all. Then I can buy insurance. You see, the things that banks enjoy in low level income countries or developing or emerging economies is that banking is a first-level need that provides services to a whole lot of people because there is a strong need for it. It doesn't depend on whether, you're rich or poor. Once you have a job, you have a formal job. Now, what are we saying? The survey I was referring to says that only 8% of our adult population is in formal employment, compared to 36% for South Africa. Almost 80% of our businesses are solo businesses owned by individuals. I will reckon that more than 50% of them are in business, not because they chose business. They chose business because they had no jobs. The big issue in the money management and money movement space is driven by income. If anyone's focus in driving any payment platform is the rural areas, I think the volumes will disappoint them. That's my hunch. When they move to the urban areas to take on the institutions, it's going to be a bloody fight. Because I don't think the banks are going to give up their launch easily.
Do you think we have a major problem, therefore, with the structure of the economy, where we have a very huge informal economy and very small formal economy? So the big fight, as always, is for that formal economy where the big banks, the oil companies, the few big industrial big names exist.
Precisely. I mean, our problem is an income problem. The formal economy is not growing. Agric is good, but you can't grow substantially 150 or 200 million, if some people say it's 200 million people economy, only on agriculture. The formal economy is not growing. Manufacturing is not growing. Even by official statistics, from over just a period of 4 years, unemployment figures have doubled from 9 to 19. Those are the issues. Why has the pension under PENCOM succeeded? So that now we are having a pension system that is approaching 10 trillion naira, and which in another decade may be bigger than the banking system. It is because its primary target is the formal economy. Those guys have income, and they have a structured way of saving that is almost non-discretionary. I don't see the money before it goes into my pension, into my
yes,
PFA.
Yes.
So,
and it doesn't really bother you.
It doesn't bother me. I didn't see it.
Yes.
I mean,
yes. So it's in the system.
And you'll be shocked that even maybe for half of the people in the formal economy,
yes,
if that money touched their hands and it was discretionary for them to decide whether to give it to the PFA or not,
not likely.
It won't get there.
Yes.
And for a lot of them, it's not because they are careless. It's not because they are reckless. It may not be because of financial indiscipline. It's because income levels are quite low. I love the discipline of the
generally in Nigeria.
Very much.
Generally.
Their income levels are quite low.
Formal or informal?
Income levels are very low. So that's why I say, I would like to see how this evolves. If indeed the telcos, even under different brands, places like oil marketing companies, there are petrol stations everywhere, But even for the best names, when I approach my village, the quality of the branded petrol stations under the best names don't look like the ones I see in Lagos, because what is available to pay for the petrol there is different from what is available to pay. They may be paying more per liter, but in aggregate,
the outlook.
In aggregate,
yes.
Like I said, I'm giving you the figures. We used to think that the Nigerian economy is so that the huge informal sector has a lot of cash outside the banks. It's not true. Money supply is 27 trillion. Only 2 out of it is cash outside banks.
Banks, yes.
So
the rest?
The rest is within the banking system.
Between Lagos, Abuja, Port Harcourt.
In fact, there are 6 or 7 states which statistics says probably account for 80% of the deposits of the banking system. If you take Lagos, and there are a continuum, Lagos,
Abuja
FCT, Port Harcourt, Kano, Kaduna, Oyo, Ogun, Delta, Anambra. That stretch from Lagos down to Oyo, Ogun, Rivers, Delta,
way up,
and then you
cross the Niger to 2 states,
Kano
and Kaduna.
You have over 80% of the deposit base of the banking system. How many of us do people from home send money to? Money always moves.
We send money to them.
That's the direction.
But they said yam and yam and pineapple.
Yes, to say thank you.
And palm oil. Yes, yes. It's very interesting. Let's see how the fight goes on Broad Street. The fight is just getting started.
Well,
let's see who wins.
We'll see.
Thank you. Kola, we appreciate your time.
Thank you very much.
Chief Executive Officer at GDL Asset Management, talking about the new mobile financial services landscape in Nigeria. It's just an emerging market. No one has gotten that license yet, and the fight is yet to start. But let's talk about the managed funds market when we come back.